Hey folks, let's do a pre-US for today, which is the 15th. So 15th of Feb. Hope everyone had an amazing Valentine's Day. Uh, I'm sure my Valentine's cards from all of you will start streaming in the post any minute now. So let's get over and look at these markets. You're seeing, look, oil down, SPOOs down, Dow down, DAX pretty much down here. So look, these markets are really, really tricky, and I don't need to tell too many of you that at this time. All right, we are pretty much stuck in this range, and we can't get out at the moment on SPOOs, and we might actually bring in some other traders to have a talk about this. But look, generally, the bigger context here is we have, we're kind of holding a floor in and around here, I would say, right, on SPOOs about 4085s. And we are generally broken out. All right. So if we put these drawings back on, we're generally broken out of this lower area and this mega downtrend. Need I remind you? I don't think so. And you want to be buying the lows on the range, getting out on the highs, and leaving a runner to see if you can get that breakout. And so, yesterday, no exception to what we're seeing at the moment on these equities markets. Basically up, down, up, down, up, down. The CPI is coming in with an initial flurry and a bid to the highs. While we did come out above expectation on core and headline CPIs, we were below the prior. So, not a huge amount of crazy selling coming in there, and very much buyers still propping this market up. So, all excess on these lows, finishing pretty much where we started on the S&P yesterday on the electronic exchange. So pretty much closing out there, and then just a little drift to the downside today. But again, no crazy selling. I would be looking out for shorts against the 4144s here today, to look to then trade back down to at least the mid range of 4092s, because I kind of just think we're still stuck in this bull flag, all right, at the moment. And so that would be, going for the longs down here, for then that big push to get back up across, little pullback, and then continuation to break out on the upside. Medium term, I do think we are going to be putting on new highs in the year, new highs on this year over the next 10 sessions. But that remains to be seen at this time. So buy low, sell high. You don't need me to tell you that. All right. DAX as well this morning. Some technical stuff trading here on the DAX. We had a gap, this gray area here. We had a gap. That gap is closed. I sold PVAH here, and we're looking for low of lower in case we are going to have that range trade down here on DAX. All right. So just if we look at that on a daily bar. This is actually weeklies here, but if we go for the dailies, you can see it's just back and forth, back and forth, back and forth here. So you want to be selling high, buying it low, selling it high. So really reversal down onto the 15317s, which should be down around here on your DAX contract. There would be a breach on the lows of day towards the lows of yesterday, and then looking for net longs out of that. So this just really sums up how shit the trading conditions are over the last 2 weeks here, basically. And then it wasn't easy before that either, but I think generally we are looking to go higher here. And if we just want to take note, we are only about 5% off of the all-time highs on DAX. So we there to here, it's actually 5.5% off the all-time highs. I think, let's see, actually the all-time high is there to where we are. Yeah, 5.57% off the all-time highs on the DAX. All right. What else can we say? Really, we've had Nicola Sturgeon resigning. She's throwing in the kilt today. So Euro, here we go. I think this is a long Euro story. We have held the highs since Ollie's made me aware of this. Thank you, Ollie. And so, yeah, I mean, look, I was long this thing anyway on the P-Val, and I just think this is nice to stay in here and at least look for PVH at 1.0 double 750s. that dollar, I think it's going to breach on VWAP ultimately, and we probably will retest around the P-Val. So, we can stay long on the euro on that push. May want to stay in that for a bit longer. Let's see how long we can hold on to that on the euro. And oil, getting around to oil. So let's have a look at oil. Yeah, look, IEA report coming out this morning saying that they're actually looking at an imbalance of supply over demand through to the end of this year. But that isn't really why we're down here on oil. Of course, we are down here because we have another release of 23 million barrels. Yes, that's only 23 million barrels. That's only a couple of days of supply for the US. But nonetheless, it's a release from the SPR. Back down we go. And I think this is the White House really trying to trade essentially on WTI and trying to manipulate. And so, look, I've been talking about this. We're up, we're down, we're up, we're down. And I think we've been up and now we're moving back down on oil. So you'd be looking to sell P-Val 78.60s. Definitely, I think 79.26 is on the gap low. Of course, we had that gap yesterday. We couldn't manage to trade back across and close the gap at 80.13s front month H23 on WTI on CL contract. And bang, down we go. Finding this little old gap area actually here to find supports, and then back, retest on the gap and the P-Val, and then, generally kind of just doing nothing for the rest of the day, except then today, selling down. So do I think we need to come back and retest PVAH and the gap low? No, I don't think so. I think P-Val might be interesting. I think ultimately, though, for the safer trade, I'd actually kind of say, kick the touch 8.13s short. And then go for this. If we do start to rocket up through that P-Val, then I'd actually go for the safety of gap close, and then we really trade down through the range. And as always, I've been, as I have had for the last couple of days, 76.10s. I like here. I like 75, 72s. Some pretty decent levels down here to be getting long. So yeah, that's it on oil. All right, that's it for me for another PUS session. Have a good one, and I'll talk to you tomorrow. Cheers.